Enable.
The International Diamond Conference Minds to Market was organized in Mumbai by the Gem and Jewellery Export Promotion Council and was held over 2 days in the 50th year of the GJEPC's establishment. Day 1 explored important topics related to mining and had dignitaries including Prime Minister Narendra Modi and Minister of State for Power, Coal and Renewable Energy and Mines Piyush Goyal participating in the conference. The conference also played host to delegates from mining countries, heads of retail brands and other prominent personalities of the diamond industry. India is the largest cut and polished diamond manufacturer in the world. It is a major player in the world market with 93% of its production being exported. Day 2 of Minds to Market saw discussions on the current status of the diamond industry, such as marketing and retail, international finance, valuation and diamond grading. Seasoned members of the diamond retail industry provided their expert insight.
Those consumers expect us to be perfect. When I say perfect, those consumers talk to each other. They have reviews, and each consumer that buys something from us is actually an ambassador of goodwill to his friends to buy from this retailer. They tell their friends how their experience was, how the price was. And I'm not sure if you know what is the Net Promoter Score, but the Net Promoter Score is actually consumers today, young millennials, ask their friends, what is the NPS of the company you bought from? And NPS means Net Promoter Scores is how high the reviews of that company are. So we are working very hard to keep our Net Promoter Score very high. And that goes if a customer calls our customer service and would say that he's not happy with a purchase, would go all the way as far as giving him away the ring just for him to be happy. And this is to an extent that retailers today don't understand how transparent you need to be. But that is not enough. Those young consumers would like actually to buy from cool company. And when I say cool company, they want to know that there is something additional to what the product they're buying. We have created a virtual reality showroom where people, I'm sure you're familiar with HTC and Oculus Rift, which are the new virtual reality headsets. What we have created now is the new way of people buying online, actually putting a headset on their head, and they can walk in a jewelry store and feel as if they are in that jewelry store. They can try rings on their hands as if they are in a physical location. And this is something that is coming very soon. The next few years, every person will have one of these in his house, and he can put it on and just fly to another place or to another store and buy product in that store. As a leader in visualization, we continue to develop the next generation of diamond imaging technology. To date, we have photographed over 1 million diamonds with the industry. The free diamond photography that we provide not only helps James Allen to grow its sales, but ultimately helps our diamond partners to grow their sales with their other B2B customers. Efficiency, technology, and marketing dollars used correctly will help the diamond industry grow and sparkle once again. Thank you very much.
When we talk about growth, it's not like a luxury goods company that can just increase production and sell more of its bags to more people. It's about being able to increase prices, and you increase prices by increasing desirability. The inherent desirability for the product, the willingness to pay a high price. And it's slightly different from increasing penetration of a given product because it relies so much on the inherent desirability and emotional value of the product that you present to customers. No organization is going to be able to significantly impact the success of this industry on its own. It's by working much closer together than we have in the past. It's by establishing trust and making sure that we build on each other's resources and capabilities, and we add to each other that we're going to be successful. And we've really made a point of creating these links and finding the contact point with every organization. And the Gem and Jewellery Council in that respect has been probably the most forthcoming, the most visionary organization we've been working with.
The International Diamond Conference successfully fostered interaction between the producers, the manufacturers, and other sections of the pipeline to ensure better understanding in building cooperation to steer the industry forward. This was done with the help of panel discussions, beginning with the topic Survival in the Absence of Growth.
Is this subject correct? Survival in the absence of growth. Are we here to survive? No. Are we cheap? No. Are we for free? No. Our youth is expensive. Our lives are expensive. We work very hard to make profits. And businessmen make profits. If we don't make profits, we are not good business people. 50 years of this journey in the diamond business, we have made profits. The last few years have been tough, no doubt. But times change and there is evolvement. And we are trapped between that evolvement. There are peers, and the peers are different industries. There are peers our peers are handbag businesses, our peers are electronic businesses. We have to look at our business in a larger scale. We need to fight out the differences internally and externally.
I think, as I said, the main concern is our own attitude and our own view on our own leverage. I think if you understand correctly your leverage, you're not squeezed. You are proactively understanding what's coming in the future, whether it's about the risk of legislation, about the issues of banking or lack thereof, your attitude towards the bank. I think it boils down to your own attitude on business. One of the main aspects is the lack of clear direction and cooperation within the midstream industry between the centers. I'm still waiting for an answer in terms of when will we, as a leader of the midstream, sit down, look at our leverage, look at all the forces around us, and take common position for the good of everyone.
Customer also accept the uniform price and fixed price, and seller also, so many change. About today problem, say little big problem about the mid-scale is a bank finance. But last 5 years we looked at so many problem about the bank. So what we do also bank people. In our, some people also maybe misuse also bank, maybe cheating also bank. That's why bank also strict. But last new government come, so I think and hope a little big bank also soft, then mid people also scope. But ultimately we hard work and smart work.
We have to see what is required in the market, what the millennials require, and how do we address those things that we are not doing. So, players in our market will have to drastically change. And in this change, I see a much bigger role of all our different countries' associations like Council, like AWDC, WDC, everybody. We all have to sit together and brainstorm.
20 years ago, diamond was not really a big retail product in India. Thanks to the council, thanks to some mining companies, especially Rio Tinto, they've been able to develop the taste for diamonds for the Indian consumer. I'm sure more can be done and more will be done. But diamond has now, I think, rightfully found its place in the retailers' shops in India.
It's time to take a very short break. We will be back with more highlights of the event. Stay tuned. The second panel of the day revolved around international finance and examined the new realities of diamond financing.
Though we have been insisting that the corporatization is one of the major initiatives to make it a little more transparent for a reliable figures, for a reliable balance sheet and all. But there is always a counter question when we had seen some of the delinquencies and some of the failures. It is not only the non-corporate entities, but it is the corporate entities which has really been given us difficulties for the banking sector. So I don't know whether the corporatization is one of the issues. I would like to flag it to all of you. Then the second one is, of course, professionalization in various fields of the trade is also one thing we would like to have, because we need to have professionals handling specialized areas, unlike other sectors which are almost undergone a lot of professionalization in the last decade or so.
To know that if you, for instance, have an invoice of 1 million and you sell something to a competitor, and that competitor the next day or the day after also still sells the same goods for another million, hopefully with a little bit of margin to the third party. If all of them present the invoices to the banks, you quickly can raise a lot of money, which does not necessarily lead to added value within the supply chain. So I always say you need to try to move the goods as quickly as possible from the rough towards the manufacturing, towards the customer.
Organically, many of the most successful companies in this industry are family-owned businesses. So you can see that organically you can already grow using the capital generated within the businesses. But in these times, perhaps there's an opportunity also to use the capital raising capabilities of financial institutions, not necessarily equity raising or debt, but there are other means of doing that. Financial institutions, on the other hand, are most interested in growing markets. Now, we already know that one of the major challenges for this industry is over the last decade almost, it's not been a growing industry. So how do you finance something that isn't growing? If you're a lender, you not only want a return on capital, you want a return off your capital. So it's something which the industry has to address.
To start with our home market, there has not been much problem because of two things. One is funding was not so much of a challenge because Indian banks not so much depend on interbank market because we have been regulatorily a strong credit deposit ratio stipulation in the country. So the banks have their own deposits or lendable resources to lend. And we also saw that Indian banks essentially is stable. That's because mostly it is controlled by the state-owned banks with SBI at the helm of affairs, and they have been created a massive stability in this market. So we didn't face any difficulty in this country. And also the foreign banks provided at that time the foreign or the US dollar funding that was required at that particular juncture.
The panelists got together to discuss the pertinent issue of valuation using the Kimberley process, and they generated different interpretations at the interest of the audience.
India and Belgium have done something which is innovative to the Kimberley process already more than 9 years ago. India and Belgium put an innovative online certification system together that is checking all of the data that are going for KP certificates that are sent from India to Belgium with diamonds, and the same way goes for the other side. First of all, the Working Group of Diamond Experts, subgroup of valuation, continues its work because that's how you have to plow in those particular advancements that have been suggested. And we will have to see now how can we ensure that was the onset of the KP chairs move in 2016, how can we ensure that also artisanal miners receive fair value? And also that their country, their government, is actually receiving the dues that are to them. And that's where we have, basically the country has the responsibility now to make certain that the artisanal miners, as well as the country officials, are getting the sufficient technical training and technical assistance from the KP.
Valuation is a whole process for African countries, and more particularly for African countries with artisanal mining. As you pointed out, in my country we have two types of production. We have artisanal production, which is the most important production, and we have industrial production because we have some industrial companies mining diamond. How does valuation occur? Because the most important here is value. But we need to start by telling you that as government, we have regulations in place. And the most important income for the government from diamond is from taxation. And taxation is regulated. But before we come to the taxation, we should start by telling you that as participants of the Kimberley process, we have put in place a system which starts from the mine and which goes all the way up to the export point.
But the issue that we have is standardization of the valuation methodologies. Now, I completely understand and respect that valuation is a top priority for producer countries because they look to maximize the value of their mineral resource wealth, and they have the right to, absolutely. But across many countries and many companies, there exists very different valuation practices. For companies, valuation practices range from artisanal small-scale mines all the way to large-scale mining like De Beers, like us. Just within the DPA itself, there are different valuation methodologies, and they're successful. They're different, but they're successful because they are fit for that business.
Today, what Belgium has a perspective, because that is a trading country, what India has a perspective is, which is a manufacturing country, an African country like Congo, DRC, can have a different perspective for that. Now, if these three perspectives differ, every country is trying to maximize their revenue. So, in the end of the day, if your country is trading, and in the trading, if, let's say, a value or profit is generated, in the end of the day, that country, how that country can be castigated because they are generating whatever, they are opening the boxes or closing the boxes, or they are opening or not. If that businessman declares that much income there, and if that country taxes and gets that revenue out of the country, every country, when they are assessing that value of the good, they are assessing the value based on the prevalent parameters, what is there. Now, based on the prevalent parameter, what we are discussing in KP is that whether we can have a standardized parameter across countries to arrive at a value of those goods.
It's time for a short break. Stay tuned for more highlights from the International Diamond Conference. The panelists came from across the industry and from various countries. Key concerns like profitability in manufacturing, future buying trends, and valuation were analyzed, and the path forward was clearly presented. The discussions concluded with important takeaways for all stakeholders present and highlighted India's role in the diamond industry.
India is growing rapidly, and in my opinion that India is growing, let's say, more sustainably than other markets. And if we see the figures of consumption, the growth of such a consumption in 2-3 year perspective, it means that we will see the new stabilizer for our business generally. So we as the miners, we really rely upon the future consumption in India, and that's the part of our intentions to promote also domestic diamond consumption here in India.
Only India has the capacity today to consume, to process the output of the world. At the moment, out of the earth, we get about $13.5 billion, but the diamond industry, with relatively little money, is tremendous labor intensive. We have, of course, you have the mine workers, but in terms of the processing, you have close to 800,000 workers. You have even had more in the future. And for relatively, in a way, little money, you provide enormous work, but you can get much more.
Mines to Market played host to leading officials from international certification bodies such as the Gemological Institute of America and HRD Antwerp. The officials represented their cause as they spoke in detail about the illegal mixing of natural and synthetic diamonds and how to prevent it.
Synthetic diamonds, they are around in the world, so as a laboratory, our main focus is to make sure that we can discriminate between natural ones and synthetic ones. So we have a team of research scientists, and we have a lot of equipment which was developed in-house that we are using to make sure that we can identify each and every stone. So this is what we are doing. We are trying to protect the diamond business by discriminating between natural and synthetic diamonds.
Until the last couple of years, where there's been enough of it, enough synthetic diamond, and at gem quality, that it is a concern. As a result of the work that we've done over those decades, we have developed identification techniques that are rapid, inexpensive, that allow for the separation with 100% certainty synthetic diamond from natural diamond.
The day's deliberations wrapped up after many productive sessions.
It has been exhaustive but productive sessions at the Diamond Conference. It was our honor and privilege to have the Honorable Prime Minister Narendra Modi address the event that made it truly a momentous occasion for the world diamond industry, and I must say, it can't get bigger than this.
The two-day Mines to Market conference came to a close on a promising note as members across the world diamond industry provided a variety of insights on the growth of the whole industry for the benefits of each stakeholder present. The Gem and Jewellery Export Promotion Council's platform fostered interactions and addressed issues with the help of expert speakers and panelists with the common goal of the flourishing of the industry.
Focus, ideate, innovate, enable.